Well, hello everybody. I hope you're all well this evening. Mike Smith here with your Inner Circle session for this week. Just let me know you can hear and see me okay. That'll be fantastic, and then we'll get things underway. Awesome. G'day, Wayne. Thanks, mate. Evening, Adrian. Hi, David. Again. Good to see you, mate. Cheers, Cole. Thanks, Michael. Your emails were getting flicked into junk, Michael. I've located them. I'm not sure why that is. Hi, John. But I can now answer them. G'day, Rach. Okay, so trading a trend continuation, that's what we're about tonight. Now, obviously we've covered some other systems, some other strategies before. This sort of completes the series a little bit. So let's get into it. Okay, but as we do, we will have a look at live markets, of course, as we're doing this. And just be aware that this opinions that you hear or see on charts and sentiment are mine, not representative of Go Markets necessarily. Everything you see or hear is part of the educational process, not direct advice to take personal trading action. If you have a trading plan anyway, that's going to tell you to do that. But of course, that's what tonight is about. It's about tightening up your trading plans to some degree. And of course, risk management, which we'll talk about as well, is a key part of everything that we teach, or everything I teach anyway. G'day, Colin. Hi, Ian. G'day, Robert. And hi, David. Fantastic. G'day, Richard. Okay. Steve, no, I haven't. Can you resend, please? That would be great. Tell me, just drop a line as to which email address that was sent to, and I'll have a look too. Okay, so let's start by looking at what's going across, what's happening in the markets now. Now, I can't state this more severely than this, but this is a big night. This is a night of nights, okay? It's very rare that the markets are almost at a flip of a coin, but I actually suspect that they might be. Now, you know, I've been a market bull for the last few months, but this could be different. Certainly, it could be different in the short term. And what it's all about really is, if we look at what's been going on, is that underlying all of the stimulus packages that have been put in, and where we are in terms of markets as a whole, have been two key things that have been on market minds. First of all, valuations, and secondly, the potential for inflation. Now, on the first topic, we're in the middle of earnings season. In fact, we're about 3/4 of the way through it now, and earnings keep on smashing expectations out of the water. And that's one of the reasons why, up until a couple of days ago, we're still seeing markets going higher, because they gave validity to the valuations that are there. Despite pandemics, companies have re-engineered, they've kept an eye on costs, and so their projections are really in line with what you would expect, based on the performance from the last quarter. So there's no sort of off-the-wall valuations. So that was that little thing taken care of. Now we move to the inflation issue. Now, obviously, the Fed, one of the reasons markets have gone up is that we're working in almost essentially a zero interest rate environment, and that's globally, of course. And so what the Fed has done is it suggested or intimated that they wouldn't be looking at interest rate rises until 2023. Now, for those of you less experienced or familiar with markets, what happens is central banks normally, in normal circumstances, look at two things in terms of their interest rate decisions. They look at jobs data, and they look at including wages, and then they look at inflation data. If jobs are moving higher significantly and wages are going up and there's not much employment, there's always the chance that spending is going to get out of control and inflation is going to rise anyway. And if inflation rises, most central banks have got the mandate to keep inflation under control. And what that does is it prevents this boom bust economy that is always a risk. So At the moment, the Fed has priced in a fairly generous 2.5% inflation month on month before it starts to take action. But we're going to get better than that. We're going to get better than that tonight in tonight's inflation data. Now, part of that is pandemic orientated. So the year-on-year figures are comparing April versus April last year. Now, April last year was shocking in terms of where everything was, of course, because that was in the midst of that first wave of pandemic, when everything was going pear-shaped, when we were looking at depression as a potential. We had Fed stimulus, or the Fed and policymakers scrambling to try and support the economy in some way, shape, or form while everything got locked down. Right, I'll have a look at that, Steve. Thanks for that. So we've got a situation now where that year-on-year figure is going to be significantly better than it was last year. So it's really the month-on-month figure that we're interested in, but we want to make sure it's not too hot, because if it gets too hot, what that's going to mean is that the Fed may not wait until 2023 to raise interest rates, or they're going to have to intervene in some way, shape, or form to try and cool inflation down. Now, New Zealand did this. They tried to cool their housing market down. It didn't go down particularly well with the New Zealand dollar, but generally speaking, it was seen as an appropriate fiscal move to make sure things don't overheat. Then, of course, it's reflected in bond yields as well. So a 10-year bond gives an interest rate, gives a yield, gives a coupon, whatever you want to call it, to anybody who's holding those treasuries. And that's been a popular place to put your money for a lot of institutions. That's the safe money. Now, this time last year, yields were 0.4%, absolutely miserable. Nobody would put the money into it. And so all the money went into the stock market. And when the stock market was low, then the yields you were getting from dividends were significant. Okay, but now the stock market is higher. Those dividend yields have come down a little bit as a percentage of the share price. And we're seeing now that the Treasury yields are creeping up and around about 1.65 or 1.7. Now, there is also a 10-year yield auction. So the combination of that 10-year yield auction and the inflation data, which if it comes in too hot, will push that Treasury yield up, are both significant risks for the market, for the share market, significant movers for the US dollar, and therefore significant, potentially significant impact on not only US dollar pairs, but also perhaps the commodity-based currencies as well. The other thing is that we've noticed tech has underperformed over the last few days, and that's because tech stocks do particularly badly in a high interest rate environment. So with the potential, or a higher interest rate environment, so with the potential for interest rates rising on yields, as shown in the 10-year, then tech stocks do potentially badly or less well than so-called value stocks like the banks, etc., which tend to do well if the prospect of an earlier interest rate rise is on the agenda. So that's really where we're at. Earnings coming sensationally well, supported valuations. Big night tonight in terms of that inflation data and the 10-year bond auction. Now, just let's put a little bit of stuff around that, give you some figures to play with. So if we look at the futures, we can see here that we've got, these are actually better than they've been. And in fact, the Euro stocks have actually, or the Euro futures were negative, they've turned positive. We see the US futures down about 0.3% for the Dow, the S&P, and the Nasdaq still a drag as the Russell's getting hit hard. That will really suffer along with the Nasdaq if we get a stronger than expected inflation data in. Because of that, we're seeing US dollar slightly higher, and we're seeing gold and silver slightly lower. Now, why are we in an inflation environment when really businesses aren't putting the prices up too much? Well, they sort of are, but indirectly because of food and energy. Soft commodities have gone, so if we look, for example, at, you can see that chart just come up on oats. You can see how much higher that is. If we look at corn, you can see how much higher that is. If we look at soybean, you can see how much that is. If we look at If we look at not so much in livestock, but then if we look at oil, if I just bring up a quick Brent chart, you can see what that chart looks like. And in fact, we'll put one on here. Let's just quickly look at UKO, USO, just to give you the context of this. There we go. Oh, no, that's a 5-minute chart. That's moving up. Let's put it on a weekly chart so you can see context. So oil, since this time last year, so April last year, which is April to April, so we'll actually look at the end of April last year. Let's not bias it too much. From there to where we are now, it's up 143%. Now, part of that, of course, is as production has come down, but that automatically pushes prices up. And now we're at levels really that are key. We're pre-pandemic, etc. So soft commodities have gone up, energy has gone up. So food and oil, food and energy are both rampant. Okay, so if we look at the economic data that's coming out today, we've also got inflation data coming out of Europe. We'll have a look at that as well. Right, let's look. We'll come back to the data that's out now. But if we look, there is that CPI data out in just a little over 2 hours time, and you can see the differences between they measure CPI and then they measure CPI excluding food and energy, and you can sort of see the difference there. If we look at CPI year on year, we can sort of see 2.3. That's X food and energy, and you can see 3.6 year on year if you include food and energy. That's the expectations. You can see what a jump that is from last month's figure. But remember, this is year on year, so it's comparison with last year's figure. Here we don't expect the month on month to go very much. So you can see this, it's 0.3, 0.3. And in fact, month on month with the whole, we expect it to go down a little bit simply because oil prices have just and soft commodities have just come off their highs a little bit. But we're looking to see if there's any hot numbers. If there's any hot numbers here, equity markets will sell off. Some strength will come into the US dollar. Some weakness will come into US dollar related pairs. Now, obviously, with the US dollar being the beneficiary of that, and we're going to see commodity sell-off. We might even see, surprise, surprise, copper drop, which is just going nuts. And here's the great news for you Go Markets clients, because we like great news. We can now trade. There's copper. Okay, this has blasted through decade highs. It was last at this level around about 450 in 2011. Okay, so it's absolutely smashing out of the park. I'll do a webinar on copper because copper's where it is at, and will continue to be where it is at going forward, which is why we're singing and dancing about copper stocks and copper itself. Now, what is the great news that I was going to share with you? Well, you can now trade copper futures on MT5, possibly MT4 as well. I would imagine it is MT4. Okay, so you find them. And you can't do this with ACAP or a lot of the other brokers. So copper futures is where it is now tradable on this. So I've actually traded this a couple of times already, just because I can, and because I got so excited that you could trade it. There you go. Just be aware that the pricing on this is really very, very different. Okay, so it's look at the price of it. Okay, and look at the difference. Now, just to give you an impression, I opened a 0.4 position, and it was $50 on so 0.4 of a contract was $50 move on 0.2 of a 0.002 dollars, so like 0.2 of a cent. Okay, so if you are going to trade this, if you've got the opportunity to trade it on a demo just to get used to the price, and that's great. If you are going to trade it, just make sure that you trade small volumes until you get used to that, irrespective of what else you're you traded or traded before. Just get used every time you hit a new asset class. Now, of course, the other way to trade copper is the copper stocks. We look at FCX. There's FCX on a daily chart. Boom. That was one of our charts of the week. If you missed it, well, that's what happens on a Tuesday and a Thursday lunchtime. And of course, in Australia, we've got Oz Minerals. It's probably the major play. Dug down a little bit today, closed off the lows of the session, but you can see how well that's been doing on the back of that copper move. So we'll talk about that at another stage, but just to fill that in now, in terms of where we are on markets, let's just look at the US dollar index very quickly. There's the US dollar index. Quite surprisingly, not doing particularly well despite equity sell-off yesterday. So this is today's contract, up slightly, but holding on to support at around about 90. So really, really miserable performance. Gold has leveled out, and that may be anticipation of what's happening now, just over that key 1800 level that we broke. And copper is trading, and silver's trading up and down around the 70, 27.50. So both of these are key points. Now, what about others? Let's look at the Euro USD. There's a surprise, it's trading at a key price level with very little movement in the last 3 days. Let's look at US yen on a daily chart. You can see, well, look, we are triangular. Okay, so we're in a place of market uncertainty. You can see the triangle a bit better there. So we've got the triangle there, the bottom end of the triangle there, top end of the triangle there. So we're at a point, so we're symmetrical triangle. If we look at Aussie USD, this is a line on the daily chart. Just to sort of demonstrate that, let's just pop it on there. There's a line on the daily chart, so we're trading around a key level. So what does that say? It says markets are waiting for some more information, and what they're waiting for is that inflation data. Full stop, end of story. So you can don't try and force trades, and just be aware, and I'm very rare to say this, but just get yourself prepared for a big market movement. Consider the positions you have open, and make sure you've got trail stops in place, etc. The VIX, oh, well, look, there you go. Boom, gone up on the daily chart. VIX is up in excess. If we look at where it was 3 days ago, we're up 25% on the VIX. That's the fear index. That's what uncertainty creates in the markets. So I hope that I spent a little bit more time on that than I usually do. If you can attend tomorrow's, it is what, Thursday tomorrow, isn't it? If you can attend tomorrow's lunchtime session, if you haven't got the link for that, I'll just get you it now. Then get there, because we'll have the fallout from what's happened tonight, and it's a good session anyway. We have charts of the day and all that sort of stuff. So there we go. Copy that. Boom. I'll put it into chat. Get yourself into that if you can. So that's 12:30 Melbourne time. There we go. Okay, so just in the meantime, let's just that's interesting. What I'm going to do is I'm just going to roll this up a little bit, and what I'm going to do is change it to today, because I knew there was some German inflation data coming out, and here's the good news: is that German inflation data was at expectations. So the economists got it pretty well on the button. We look at GDP number, slightly better in the UK. Industrial production is up. So generally speaking, this mirrors what's happening in the markets, what's happening to data. It's doing as well, if not better than expected. So continuing that story of slow but sure economic growth. Obviously, the UK is in a good position because they've vaccinated more than a third of the population. In fact, half of the population have had their first vaccines. So UK in a great place compared to some of its European counterparts. And that's probably one of the reasons why the GB pound has actually been doing okay. Okay, thanks, Ross. Let's just take it off there. There we go. Okay, so there's those figures. Sorry about that. A little bit of a screen pause thing went on. So there's the German inflation figures coming out as expected. The Chinese inflation figures yesterday were softer than expected. And there's that positive impact out of the UK. So we'll just have a quick look at a couple of GB pound charts just because we can. That's interesting. The GB pound yen hasn't moved. Okay. The GB pound. Let's look at GB pound Aussie. Not really a great deal of movement in that at all. Slight blip when the news came out, but really trading within a range. Again, uncertainty reigns. Okay, or should I say UK? No, that's very bad. Okay, so there we go. So that's the key level on the GB pound. But you'd be brave to get into any currency positions before that inflation data comes out. Okay, GB pound New Zealand dollar. Yeah, a good day today on that pair. I wonder whether the New Zealand dollar has been weaker elsewhere, but that's certainly a good pair. Nice breakout trade there, as you see on the hourly chart. And a nice trend continuation on the 4-hourly chart, which is really quite cool because that's what we're going to talk about. Yeah, Kiwi looks weak across the board. Yep, all good. So I hope that's useful. So let's just review what we're doing. Obviously, this is this Trader IQ thing I've been banging on about for weeks and weeks and weeks about how important it is just to get this on board in terms of your thinking. So we've got market action, and what we have to do as traders is 3 things: is to create a response from that, all of which is in our head. So we need to do some interpretation of the market. We need to create some systems and apply them in the market. We need to make some decisions based on the interpretation and the systems we have and take trading action. And ultimately, that creates the results. So this is why 80% of your trading results are in your head, okay? It's what happens there, and that's what we've been talking about. Now, so focusing on this system creation and application, obviously the psychology around that is that you've got to have the motivation to do it and follow through on that, which is the difference between motivation and volition. You've got to engage in actually writing a system and then testing it and then trading it, of course. But we tend not to do that. We tend to just use the force, don't we, really? And if we just, again, flick back to something that's really relevant to what we're talking about here, is we've talked before about the 6 ways of market moves. So we've got uptrend, downtrend, congestion, trend pause, trend reversal, and congestion exit. Now, just for those of you who are less familiar with these as concepts, and I've got to give credit to Nigel Hawkes because he's the man. In terms of, I heard him present this about 12 years ago now when we're both presenting at the ATAA, yeah, changed a lot of stuff in my world. So if we just put it on just very, very quickly, so we're going to put, now we're still in black, let's just change the color of that to yellow. Okay, so what we've got is we've got a downtrend and we've got an uptrend. Okay, so at this point we've got a trend reversal, and at this stage we've got what's called a double bottom formation. Okay, which is really cool. Nice chart. Okay, then so we had another trend reversal here. Okay, then we have what's called a trend pause. So there's our trend pause before it continued in the same direction. Now, quite often the market trades in a sideways pattern. Okay, we can go from downtrend to sideways or uptrend to sideways, and this is termed congestion. And when we move out of this into trend again, it's termed congestion exit. Okay, so uptrend, downtrend, trend reversal, congestion exit, and trend pause. There are our 6 ways. So if we use these to make our decisions or use these on which to base our strategies, we're in a good place, because the best place to trade is congestion exit and trend reversal. That's for entry. Okay, for exit, then we sometimes use an uptrend or a downtrend going into congestion or trend reversal. That's the way it works. But what do we do with this, baby? What do we do with the trend pause? Well, that's where your trend continuation trade gets in or gets a look in. Okay, so having done that, let's flick back to this. So just to review this, would be in at the start of a trend. So trend reversal and congestion exit are the 2 major points we'd be interested in. So these 2, we'll look to avoid early exit when there's a pause. So we want to be sure it's just a pause, it's just a retracement rather than a reversal. We've talked about that before as well. And then we possibly exit open trades when something moves into congestion, or obviously trend reversal. So that's where we're at with all of that. Now, if that's the foundation of trading strategies, we can then move on to look at what those trading strategies may be. And we've got four primary key entry approaches we've talked about before. Just to follow on in this series, we've talked about trend reversal, we've talked breakouts, we've talked bounces, we've talked a fundamental idea, so long-term fundamental idea. And then there are two secondary entry approaches. We talked accumulation about a month ago, and now we're going to complete the series by looking at trend continuation. So I'm just giving logic behind the process that you go through in terms now. The process we sort of go through when we're looking at markets. Education shouldn't just be slamming anything that you're prepared to slam out, but should be based on a process, and that's what I'm trying to do here. So let's look at the trading anatomy of trend continuation. So if we look at a chart, what are we seeing? Because that's when you're developing a new strategy, this is the first step. So what is the price action that we're seeing and associated movements that we're seeing with trend continuation? Because normally when we discuss entry strategies, we're looking to optimize the price point where we get in, not at the start of a new trend, but even at the start of a new trend. Let's just correct that before it upsets me greatly. There we go. At the start of a new trend, okay? But this is different because the situation is we've got an uptrend or a downtrend in place, and then it pauses, or in other words, retraces perhaps, before rejecting of the eye. There's two things that can happen at that stage. So it can remain a trend pause and then go into trend continuation, or it can go into congestion. You think about it, pausing, that pause can become a congestion, or it could move into trend reversal. Now there's various clues we can use to identify which may be happening. And so if we just pop to our chart, let's look at another chart on keeping it on the same one all the time. Let's look at Aussie USD. Why not? Let's look at an hourly chart, maybe. Just want to make sure I catch. Oh, 3:30 a.m. Yep. Okay. So that's nothing. Yeah, it's rubbish. Okay. So okay. So what we've got here is, so we have a trend in place. Now this here, we just took it to this point here. Let's just take this automatic movement on. So this point here, this is a pause. In the same way that we had a pause here. There's a couple of things here, or there's one thing here that may be interesting, or two things here that may be interesting. First of all, it's engulfed that candle, and secondly, the volume's increased. But at this stage, it could go like, let me just try something interesting. Yeah, good. Glad it worked. So at this stage, there's a couple of things that could happen, okay? No, it didn't work. Boo. Okay. Okay, so at this stage, a couple of things can happen. I know I've said that a couple of times now. Okay, so it could simply pop down here and then move higher. Okay, that's option one. So that would be trend continuation. Okay, option two is that it could go here and then do this. In the same way that it came down here and then did this. Okay, so it could go into congestion, or it could reverse in the same way that it possibly did there. This is not a very good chart for showing this on, but let's just bear with me a while, okay? But I hope you get the concept. So there's three things that could happen when it stops going up. It could continue to go up, could go sideways, or could go down. So we need to look at clues that say, well, look, this trend continuation is likely to be the one. And then if that happens, then we have a potential entry opportunity. Let's just see if we can find a better chart, but I trust you get the idea. Okay, so let's take it off the 1 minute copper chart. And see what happened. Okay, so yeah, I hope you are sleeping, Adrian. Oh, rightly so, buddy. Okay, so yeah, you don't want to be up at 3:30 a.m., mate. Even to hear me, that would be outrageous. Okay, so we've got a breakout here, okay, and so we've got an uptrend in place there, and here we see a pause. Okay, so we did have a move back down to here, and then we had an attempt to create another move higher. Doesn't matter, it's a 30-minute chart, occurs on any time frame, any vehicle. Okay, but what happened in this case is that this trend pause actually became congestion. Okay, but it could have as easily have gone up at that stage, or it could have not only sort of went into congestion, but it could have smashed through that and gone in a downtrend. So absolutely. Maybe CAD CF on a daily. Let's have a look at CAD CF. Not one I normally look at, but we'll do it anyway. Oops. Then drawing pen off. Well, wouldn't you believe it's not on there? Don't know why I did that, but we'll see if it's up there. There it is. Okay. Let's take our scribblings off. There we go. Need to catch up a little bit with the data. Come on. Catch up, catch up, catch up. This is what happens when you use a stack of bandwidth giving a webinar. There we go. We've got the weekly there. No, we haven't got the data there yet. Nope, doesn't like it. Let's come back to that. I'm not sure why it's not updating. As I said, it's possibly because I'm hammering it a bit at the minute. Okay. Post your webinars to YouTube. Yeah, I could do that, G, but the problem is that it's a live market update, and so even by 8 a.m. when you guys may get up, then it's 5 hours out of date, because it is really looking at what's happening right now. Although there's some suggestions perhaps for later on. I'll have a chat to the guys and we'll maybe try a few and see how many are watched. But that would be the disadvantage. Anyway, let's forget CAD Swiss franc for now. I don't know what's going on with that as a chart. Okay. Yeah, okay, let's look at euro. So what we mean by trend continuation. Actually, let's go back to our slide. So really what we're looking for is we're looking for the last time it's stopped, turned a pivot high or pivot low, and then what happened next. Okay, so if we look at this Euro New Zealand dollar 1 hourly chart, you can see what happened here. And this is key. So there we go. Okay, so there's a trend pause. It's actually gone into what is a nice little flag situation there. And then we had a continuation into a downtrend. We knew it was continuation when it broke that pivot low. Okay, so on this candle here, that said we're in. Okay, if we look here, you could suggest the same thing. This was I guess if you put it on a 30-minute chart, you get a better look at it. Actually, just take all these drawings off again. So what we had here was no, that's horribly choppy. Okay, so what we had here was a move up. You can see how it paused here. Okay, so it moved up here. There's a trend reversal. Okay, moved up here, pull back here, and then we knew it was going to continue once this candle was in place. So what do we notice when this candle was in place? Well, we can look at this in a bit more detail. First of all, we can see it's in the top third. That's pretty good. Not a great volume bar on that, but certainly if you'd waited till the next one, would have got high volume on that as well. So that would have been a better candle. Just something else, just out of interest, just to put on here, we'll put an RSI on here. So this stage, it was getting very close to being overbought. In fact, it was overbought. So even though that was the candle we would have got in on, the fact that it says it's overbought, we don't like it, we're going to go somewhere else. Okay. Do you get in on the candle that's circled or the one after? Essentially, you get in at the end of that candle. So the candle's got to be mature before you get in, would be generally the way to go. So you're looking for a candle close above the previous pivot high if you're looking long, or if you're going short, below the previous pivot low. So that's what we see. That's what we mean by trend continuation. So it's consistent with flag and pennant chart patterns. Just a couple of other things worth referencing, some additional points. This is different to trading immediately after a retracement. So if something pulls back, often to a key level, and then moves higher, that's a bounce strategy, not a trend continuation strategy, okay? So actually, let's just do the other. So let's find an example of that. The market is just so tough to do that with, but okay, let's see this. So right, so there's a breakout trade there. Okay, here we have a breakout trade. Okay, top third of the candle, high volume, tick tick tick. Okay, and let's say we missed that, and then we saw it retrace here. Now getting in here is not a trend continuation, it's trade off a bounce. Okay, because we're trading the bounce off that support line. To get into this trade, we will be in as a trend continuation. We would wait until the trend is continuing, which will be this candle here, and you can see top third, high volume. In this situation, of course, what we did, or what we had, was another retracement before subsequently moving up. So again, if we thought there was a key level at that, and you could suggest that there is, very loosely, then, but you want to trade on the retracement, you'll be trading, even on a bounce, you'll be in on this candle. So you might as well wait till it's broken that. So the candle that would break that in the top third with high volume would be that one there. So this is the candle we were getting on right at the end of it. Okay, and then trade that up until it went into congestion. Then, of course, we'd exit the trade. So that's how we use it. That's what we mean by a trend continuation. And we don't trade down here, we trade up here. So it'll be interesting to see what happens with this. So now we have a downtrend, we have a retracement. Is it a retracement or a trend reversal? Well, it's a little shy to be a trend reversal. We're talking less than, maybe a reversal at 125 pips. So we've got a reversal there. Now, what happens here? Does it go into congestion, or is it another reversal and goes down and into a longer term potential wave pattern, if you like, that sort of thing, which I don't. Okay, so, and then of course it's different again from a breakout trade. There's a breakout trade, there's the candle we might be interested in, and we trade up to this level here, and then probably get stopped out here on our trail stop. So that's what it looks like. And also, if we checked a longer time frame, it may not show a trend pause. So if we look at that, okay, if we look at this on a weekly chart, that's what it did. So that hardly shows a trend pause at all. Okay, if we look at a short-term chart, if we look at this, so there's a retracement on the Euro USD. Look at this on a weekly chart, there's no retracement there of any note. So that would be the other thing that we would see on a longer term chart. And of course, if we use the MACD, so we stick the MACD on that. Be just to see if I can find an example of this, being the market being as it is now, which is sort of slightly okay. So here's the MACD. Now it doesn't show us that there. So we've got a breakout trade going on here. We can enter around here. You see it paused here. There's a trend pause. Okay, broke the pivot high. We're in on this candle here. Very, very difficult to trade that. What do we get on that? No, volume's a bit low on that, so we would ignore all that and we'll get in on this. Okay, so let's say we're live on this trade now. There's a GB pound Kiwi. Okay, so we've got higher volume here on that one there. We've got it above the MACD. Now, if this drops down, so let's assume that this drops down here. Okay, I'm going to draw this as to what could happen. So let's say it dropped down there. Okay, now from an exit, let's say we're not in this. If we were in this, we might see this happening on the MACD. Okay, so we might see that signal line go over that on that move down. So we missed this chance here to make some profit. But if it subsequently goes up there, what we might see is, let's just say we've got a couple of bars of MACD signal line being above. It's a very rough drawing. But then we might see this. Okay, so we might see the signal line coming back inside the histogram as it broke that pivot high there. So we could re-enter on a trend continuation strategy at that point there. Just ignore the SMACD. I'll find that out because the only difference between the SMACD and the MACD is that it changes color when the signal line goes above. So it saves you having to say, well, is that sort of above or below? So I'll find out where you can get that indicator from, but that's a bit of a side issue. All good. Now, as the overall trend is already in place, there is a potential of being overbought or oversold. So it probably makes sense to put an RSI on there. And if it's a long trade and you go, it's over 70, then you probably would say nope. Just simply because there's already a trade there. If we look, I think there was one example there that we showed. I can't remember which one it was off the top of my head. Apologies for that. Okay, so yeah. So here we are. So we get a that's actually not above. That was the example I think I showed. Okay, so we get a trend retracement. So this actually retracement pulls it below the RSI, which is sort of making it happy. But then we haven't got our candle close in the top third of the bar after it broke that pivot high. So we scrap this as a trade. Boom, bash. Well, not interested at all, matey. Let's look at Euro Yen. Okay. Okay, here's an example. So you'll see here that we could have said, oh well, look, we missed this breakout trade. Okay, missed this breakout trade here, but then it retraced. Should we still get into this when it breaks the pivot high of there? Well, look at where the RSI is. It's over 17. It only had 2 bars to run before it reversed. So there's an example of Now it doesn't matter how many bars this is. Essentially, if it's a price pullback below the previous, then that's fine. Now you can do all sorts of things to make that a little tighter, but the key thing at this stage for all of you is to really nail down a strategy that you can start to trade, and then you can refine it later to fit your particular trading style. Just looking through to make sure I've answered questions as we go. Yeah, do a check-in with RSI before each trade. Mike, I don't tend to on congestion exit. Good question, but I would on this one if you're trading trend continuation. So I was talking to somebody today about templates, and actually talking to somebody the day before as well, who I'm coaching, and was talking about how to sort of just make life a bit easier, and talked about, well, look, if we look at all of these things that I could put on a chart, so we've got the RSI, the ATR, some volume. Let's stick a MACD on that we use at various points in the trade. Okay, this starts to get very blooming messy, doesn't it? It looks very pretty, but really, this one isn't relevant until exit. So we could, this one is only relevant if you're doing a trend continuation. So maybe you have a template which is called simply breakout template, has your ATR and your volume on, okay? Possibly trend reversal, exactly the same. So your two standard moving averages, your 30, your 200 if you're looking at a daily chart, and that's all you need. If you're trading so then you have a template which is your trend continuation entry. So you see a trend continuation, you just flick it on, bish bash bosh, it's on there, all you need is there. And then once you're in, then RSI becomes irrelevant, ATR becomes irrelevant. So any open trades, you use my open trades template, which of course includes the MACD. So we'll have the MACD and the volume on there. That's just a suggestion. Do I use the same settings on MACD all the time? What I make sure I do, Mike, is yes, I do, but I make sure that those are consistent. I use 10 and 20 moving averages. It seems a nonsense to have MACD. If we look at the MACD properties, it's usually 12 and 26, but it makes a nonsense of that to have two EMAs that you're using here different to the two EMAs you're using on your standard chart. So I tend to mirror those up now. Again, otherwise you get different crosses. If you're trading a trend reversal, you get a cross here on using the MACD, and you get a cross here using your two moving averages you're seeing on here, and your then your sort of your cross will be at a different place on your MACD when it crosses the zero line. So just sort of makes it a bit of a nonsense about it all, really, to have different MAs. There's another example. So we could even, I don't use the MACD for entry. I know some people do. The information in terms of the entry and momentum is the difference between, is the fact these moving averages are moving apart. That's all I'm interested in if I'm looking at momentum. Just to look as though there's some legs in this trade or not. It's really the MACD I use for exit with that signal line over the histogram. No worries at all, Mike. That's good questions. Thank you very much for that. Right. Okay. So back to so what we've done. So again, going back to the system, we've sort of identified a gap potentially in our trade. We'd like to develop a strategy which is about trading a trend continuation. So what we've done in the next stage of development of this strategy is we've looked at what happens. So we've looked anatomically at the market and see what happens. What do we actually mean by a trend continuation? How do we define it, and what's going on around it? Then we can add our extra clues in, okay? So in many ways, once it breaks that pivot high, if you're trading long, for example, it could be viewed as a breakout. So if you look at the breakout strategies that we've taught before, then we're looking at price close versus candle. So we want it in the top third. We want potentially half an ATR above that pivot high. You don't have to have that because, of course, that's not the close price. That is the actual intra-bar price. So some people wouldn't do that. It would just be a close above the pivot high or close below the pivot low if you're going short, and increasing volume. But of course, we've said there is a risk with it being a trend continuation, that we obviously want a greater than 1-to-1 risk reward, by the way, and it's possibly worth considering adding an RSI to ensure that it's not overbought or oversold, depending on which direction you're trading. So now your plan's beginning to take shape. So this is what it would look like. We've justified what it would, we looked at the anatomy on a chart. We've looked at those that have gone okay and those who haven't. We've looked at dangers of perhaps it being overbought. We've looked at, well, look, volume's a good thing anyway. When compared to price, we wouldn't act on a candle which isn't to close in the top third. So we've got our trading plan written and something that's really specific, really unambiguous. Let's face it, relatively simple to actually start to trade. Now, of course, that isn't the whole story, of course, because exit is what it's all about. So we'll need to define an exit. So first thing to say is your previous pivot high or low is a good reference point. So if we just, again, bring up some charts, let's stick on something else and hopefully we've got something that we can use. Okay, let's assume this is a trend. Let's assume this is a breakout trade. Okay, we've got it move up here, then we've got it retracing, and then we've got a trend continuation. So at this point, we're thinking, well, look, we're in this for a trend continuation. If it subsequently goes down, there's our pivot low, okay, on this. So we could say, well, look, if it breaks back down to there, that's what we would expect anyway. Quite often things retrace again when it breaks through a key level before they subsequently go higher, as in this case it did. But what if it went down to here? What would this be creating? It'd be creating a double top. So if it breaks through there, we might have a half ATR through that beneath the pivot low that says this is now a reversal pattern. It's going to go south. So we've got an ideal place with this to put a stop. So we can place the stop, when we're going long, we can place the stop below the pivot low of the retracement. Not hard, it's there on your screen. Now, again, you can make the choice of whether it's half an ATR or whether it's simply just below, or whether it's simply just any move below or close price below that pivot low. Okay, one would suggest that if you put it on the system, you maybe need to give it just a little wiggle room, maybe half an ATR is fine. So in this case, it's still be 30 cents. So it wouldn't be very much at all. But you can make that decision, plant your flag, and then test the alternative, provided you follow your plan, of course. Because that's what it's about, isn't it? It's not about making money straight away with every strategy. It's about putting yourself into a position where you're confident in your system that'll do you well going forward. So that is why that pivot low of any retracement, of any pullback in that constitutes that trend pause is a great place to place your stop. Because if it goes beneath that, your trade idea is not okay anymore. It's an interesting thing. I just want to quickly look at Bitcoin. One thing that's different about Bitcoin, okay? So if we'd use this strategy for Bitcoin, there's our trend. So we'd enter some more. So we'd enter some more here. Excuse me. There's our retracement. We'd enter some more. Would we enter some more here? Well, actually, no, it didn't, because it didn't close above its pivot high, so we wouldn't there. But even if we thought, well, look, this is another pause in this uptrend because the retracements of all of these are still in place. We look at this retracement, and we could get in here and do some more. Now, this is a really interesting retracement because it's the first time forever, or since September 2020, which in crypto terms is ever. You can see it was the first time that it actually broke beneath the last retracement. So that is a tricky place, and why this is not doing as well as Ethereum, for example. So you can use technical analysis on cryptos if you want. Okay, so just a little deviation there. If you want to use an ATR multiple below the pivot low or pivot high if you're going short, then by all means do so, but plant your flag in one or the other and then test the alternative. If the signal is inside the histogram, so remember I said that sometimes it'll move back inside. just let's try and find an example of this. Here's a good example. It's not a great example on the chart, but here's an example. Okay, so you can see here that at this stage, this would be an exit if we were in this trend. So now we're looking for another opportunity. So we're looking for it to move, that signal line to move back below that histogram. Now there's all sorts of reasons why we wouldn't got back in there, but that would be a situation, providing everything else lined up, that we might look at. Okay. So that's what I mean by that. But there's all sorts of reasons why we wouldn't have got in here, not least because it's a big smacking resistance which doesn't seem to want to break through. Okay. Another example. So here we get a breakout. Now it might be that we choose not to, because let's just have a quick look at that. Actually, signal lines virtually on it, but you can see it's in an overbought situation, so it wouldn't fit our plan, so we've thrown it out. Okay, so that's a good example of where we wouldn't trade a pause. Okay, so and then your other exit issues, profit targets, trail stops that you use for other strategies are perfectly valid. Okay, let's just get rid of that. So that's it really. So just to go through the system implementation process. So what we've taken you through today is really the system development process for a trend continuation. We can have a look at retrospectively, see whether we can see on a chart, or look at a few charts and see whether it works when we look at it in market reality. So that Mike fella, he sort of said, well, look, this will work and this will work. Well, it might, but you need to have a look for yourself. And then, of course, you can prospectively test. You can do it on a demo, or if you are going to, and at that stage, if you are going to plant your flag and actually go and trade it at 0.01, okay? Give yourself the opportunity to see whether it works in a live market or not. Then you can obviously scale up. Take it from my experience. Creating a new strategy or trading a new instrument is stepping into the unknown. So why not stack the odds in your favor? You've created a great plan. Why not stack the odds in your favor of not losing any money while you're actually trading that? So there we go. So trade beneath your normal position sizing, as I said. Remember, your aim when you start a new strategy is to demonstrate profit potential, and then you can scale. Make sure when you're journaling your trades that you have an identifying tab, i.e. you have in your journal which strategy you're actually using, and then scale up position as norm, set a review date, and then test alternative parameters. So an example I gave there was 0.5 ATR below the pivot low as a stop, or just a pivot low as a stop. And then set a critical mass of trade. So when we go back to that trader IQ thing and about that system development, there's two things associated with that. First of all, there's a knowledge of how to put a system together, and secondly, there's the how-to of the process of putting it into practice, and then thirdly, of course, is getting off your backside and doing it, and making sure that when you do that, you follow it through. You actually trade what your plan says. So that's the how-to about how to implement a system. If you want to take a screenshot of that, if that's useful, then I'll leave that up for a few seconds, just while I check in on some questions. Really short term, Steve, to answer your question. So I'll trade the moves, but I haven't got any long-term positions in crypto. And that would be rare. That would be rare. I think I've done 3 trades on 30-minute charts over the last 4 months. I think we've answered all the questions. So really, it all comes down to you now, guys. I've done my bit. So if you want to add this as a strategy to your toolbox, I would say get your other systems in place first, and then when you go onto your secondary systems such as accumulation system and this, then that's where you could be. But what I hope you've done also is as I've gone through, is watch the process of putting a strategy together. That's as important as the information itself. So look at the anatomy, add your extra clues, and then of course the process of putting it into practice. So look, you can draft an initial trading plan and follow the implantation or even the implementation process as we've discussed today, or you can choose not to and focus on something that's more important for you right now. Yep, no worries, Ross. Just drop me an email to remind me, buddy. That would be cool. Let's just have a quick look at the market just to see if anything dramatic's going on. I don't think it will be, but let's just have a quick look, see what how the market's feeling at the moment. So if we look at the Nasdaq, sideways, Euro USD, sideways. Oh, interesting. Now, here's a good example, just a little side thing, okay? So you know my feelings on the 200 MA. People just smash it onto any chart and actually say it's important. It's like fib levels, okay, in Mike's opinion, okay? If the market sees it, then they'll trade it. So what we're seeing on this 30-minute Euro USD chart is the market is seeing a 200 MA on that and thinking, whoa, look at that, it's bouncing off that. So now, just because the market's seeing it, it's potentially become a support level. That doesn't mean it's something special about the 200 MA on the 30-minute chart. It just means that the market's seen it's actually bounced off that a couple of times and now likes it as a bounce. So there we go. So if you see it and you see the market trading it, there's a good little indicator that, and it's the same with fib levels. But okay, can't say something like that without actually giving some examples. All right, okay, let's put a fib on this and see if it fits. Worst drawn fib level. Oh, come on, Mike. Right, okay. So let's just bring it up and let's have a look at this. So is it fitting? Well, not really. Let me just, wait on a minute. We've not put it right. There we go. Okay, so now the market has a resistance at the 23.6 fib and it has a support at the 200 MA. Okay, so the market's now seeing that. So what's going to happen? It's going to trade it. Okay, now it wouldn't be a very good trade on this anyway because you've got virtually no distance up to the more established key point. But there's a good example. Okay, guys. Well, look, that's it for tonight. I hope that's been interesting, useful, and okay, that's interesting, Josh. I'll have a look at that afterwards. Okay, well, look, trade safe. Take care. People, just beware. Mike, you're very welcome. Stephen, you're very welcome. Just be aware. As always, Rachel, great to see you here. Thank you very much. Stephen, yes, we'll talk. We will see you tomorrow. Yeah, all good. So just be aware of tonight, please. Just take a bit of care. It's one of those situations where you do need to. Okay, guys. Catch you later. Bye-bye for now. Yeah, see you and see you tomorrow morning at this live session. Awesome, buddy.